Welcome to TradeTheNBA.com. This is John. This report is for the 19th of August. Well, we finally got a little bit of that breakdown the other day of the NBI Magenta below gold. And then as soon as pre-market started, boom, it began to really accelerate. We're already down to below 25. That would be pretty significant uh, dip right there. Of course, we know that we're looking to trace back each of these positive extremes. We're reached this one right here. Secondary one would be the low at 42.08, and the big kahuna would be all the way down at the 41.13 range. So from a DOC standpoint, we can see it. This is where that red reached. The red DOC here reaches at 7.5, starts to roll over from it. Takes a little bit of time for the short situation to catch up in this particular case, but we already have, in this case, green is already below red and rising. So what will happen is the green will cross the sign. That will be the first precursor of more extended decay. And then, of course, we're expecting that shakeout would drop below that 15.5. So what can happen typically within this, we get a little bit of a move down, but by then typically we get a full reset because, as you can see, steel all the way at this southern portion, uh, fresh powder for short-term buyers to jump in whenever they feel that a discount is at hand. From an NQ standpoint, virtually identical, except for you see on the DOC here where the cyan has actually met the green. We got what, 194 to 168. So just within a fraction, we'll see how it transitions. And what I would look for too here on this MBI is that cross of white above the red in this particular case, particularly before it gets to magenta and that, because that really is a significant crossover point. Particularly on the daily, that would signal more weakness. Um, White's at 7.47, so it's well within the range of the beginnings of what would be considered, the potential for a more significant downturn. Speaking of downturns, look at the euro here. I was surprised that they were able to hold it up as long as they did, but um, more word coming that now Venezuela is cutting oil to the EU, and they're having issues with drought conditions. So it's just a variety of things that are all going to compound to add to the crisis that's taking place in Ukraine, that just adds to the woes for the euro. And just slightly above parity. It's a $1 and 600 thousandths of a penny above. For those that like to trade in the micro fractions, but it's just an indication of where things are from a European sector. And the biggest question is whether the U.S. would be leading into that as well, or is insulated from it. Simply because of the domestic production, and that it's causing gold to retrace because the expectation is that weakness is growing economically, and that will lead to deflationary cycle. And so we're getting a little bit of softness within that. However, overall, inflation is not going to stop, and gold will have to ascend back up. It's just a question of how long it will take, and we'll be able to see it when it flips. From an oil standpoint, nice bounce back. We're still caught between the 0 and 23%, so that's the new range, so to speak, for oil at this particular stage. The longer it goes, obviously, it eases increase pressure on prices, but that doesn't affect their overall high level. So it's better than being at the peak, but it doesn't really. It's not made a significant enough move. If you cut it down into 50 or so, then I think you would actually see uh, a turnaround economically, at least, because that would free up a lot of people and a lot of cash to be able to do other things. Because right now, a lot of it's just being absorbed into excess costs for a lot of things, and that really dampens new consumption. Treasuries, we still expect them to TLT to move lower because rates are going to continue to rise. Um, we would have to see some kind of major negative change for the Fed to alter its position. And barring that, we know that the people will say it's baked in, but not entirely, because there's still a huge camp that believes that there's going to be quantitative easing here before the end of the year. from Bitcoin standpoint, well, it started the decay back up here in the 24s, heading back towards that range where we've been talking about between this 24 and 19, and moving all the way back down to 21. Uh, Matching perfectly the market weakness that we saw in pre-market as it was taking place. ETH was having a rather consolidating day before that selling began in post-market, and you can see the effect of that post-market selling here as I slide across. And there you have it. So it just started up here, cascaded, kind of plateaued at the 23, and boom, took another dip. So we'll be looking around that 1650 range for ETH, because below that could be interesting to start seeing additional rounds of selling from a 50K standpoint. You can see the fade off turnaround here from the DOC breakdown, not DOC in this case, the MBI breakdown in this particular case. We were already leading with white MBI. We had that first read there, and then when the secondary one came, we ended up with a little post high to it, but fulfilling its promise for a zero return under a sell signal, and in fact, it got there. In fact, I point that out here on the 5K chart as well, because we had this situation right here where we were in the ascent. We had white leading, and MBI Magenta started to fade a little bit, but popped right back above that 33 level, sustaining it. But it still signals when you get that move, particularly over the 40 with the white, that you're going to have a return back to the 0%. Now the question would be whether the 0% rises to catch up to you, or you get that full return going into it. But then when we got the secondary sell signal all the way up at the peak here, where we were ending up with a strong DOC spread, and then it broke below the zero, made a brief attempt with the red leading, and that's often what happens on these precursor cells. You'll get that red leading, and that lets you know that it's probably not going to be sustainable. And so as soon as it white popped out again, and clearly a secondary one above 40, the expectation would be to the 0%, which had risen by that point, and boom, it hit it, but there was no change in the sell signal. We dropped right through each of these different previous algo levels, and that's where we're sitting right now. I don't think it's anything out of line with where we've been currently. We've been in an extreme run. There's got to be some consolidation and pullback. We know the positive extremes. So just continue to play within there. And now, as soon as we get any kind of magenta turnaround spike coming back up, then you would clearly be able to capture the bottom side of that and be able to turn it around for any upside play to it. But at this particular stage, we're still weight leading from a 5K standpoint. So that's the long and the short of it for right now. Good action and a nice range. Can't complain about that. As always, though, trade well. We'll talk again on Skype chat.